China, 67%. European Union, 39%. Vietnam, 90%. India, very, very tough. Very, very tough. They charge us 52%.
Well, at the moment, the market is reacting to the fact that there was no ameliorative or softer statement from the US or from President Trump over the weekend. On Thursday and Friday, the US markets fell over 10%. The Nasdaq is in bear territory, which means 20% off its highs. When an index falls over 20%, you call it bear territory. The expectation was that after seeing such a fall, which has happened only 3 times before in recent history, during COVID and during the 2008 Lehman crisis, if he doesn't respond to that, then is he likely to not pull back at all? That is the sentiment to which the Asian markets are reacting now. In addition, of course, there is the Chinese retaliation as well. So the markets here are reacting to the fact that there is no ameliorative statement. We will still have to wait and see. An ameliorative statement from the US president to any of the countries can still pull back the market somewhat. What the market is worried if there is a retaliatory statement even from the EU, then it's a global trade war. China has already called the war. So that's what the market is confused about. It was expected that that big crash was the worst, but that didn't happen. It looks like there will be even worse in terms of Trump holding back, ready to take the immediate pain. His statement was that some medicine is needed. That's the market's worry, really. It is going to get worse before it gets better. That's the first worry. The second worry is, even when it gets better, the world is going to grow much more slowly than what was expected before the Trump presidency. We are reacting to that. So even when we correct, we're not going to correct back to the previous levels because there is a global slowdown. Actually, only the developed countries and China who have retaliated. They are in a slightly stronger position than India is, than developing countries are. And so those are the 2 blocks that have retaliated. The rest of them are willing to come to any concessions. To be fair, even Canada is willing to come to concessions. But the Indian position relative to this issue is very strong. Our trade deficit, the important point is Trump is not going by your tariff levels. You can have 100, 200% tariffs for all he cares, but don't have a trade deficit with my country, which is buy more from us and sell less to us. That's all he wants, which is India is in a position to do, because our trade deficit with him is only $40 billion or thereabouts, and one can easily buy more oil even if it's a little more expensive. And once the trade deficit comes down to about $10 billion, the tariffs on our products will come down. We will still have a 10% tariff, which he has announced on all countries, but we are in a much better position to negotiate, saying we will buy some more, and thereby, if you give him a commitment that we will bring down the trade deficit to $10 billion or zero by the end of this year, tariffs can come down. We are in a better position. But you must remember that that is not the only reason why the markets are falling. That will make things better for us. Markets are falling because we are not only selling to the US, we are selling to the world. And if the world is in a tighter place, in a worse place, then Indian markets will reflect that. Our exports to other countries will also suffer. So we have to keep that in mind. We are in a good position with respect to the US. We will be the economy which will fall less than other economies, but our growth is going to be less than we thought earlier this year.